Hi, my name is Connor Woods, market analyst at Forex Signals and howtotrade.com. And together with my colleague Shane Veneer, we're going to show you the best ways to start trading natural gas. Now, natural gas tends to be a commodity that often retail traders overlook. But why? I guess maybe they feel it's too difficult to get into, they're unsure of the meaning behind it, or maybe they're just put off by the sheer volatility. Now, natural gas, it's one of the most vital resources of energy in the world. It accounts for about 23% of global energy demand, so its global importance cannot be understated. In the times we're in right now too, it is highly topical, with the war in Ukraine causing chaos in this market. But with that comes opportunities. So let's switch over to our analyst in the States, who has plenty of experience in trading this market, Mr. Shane Veneer, who will talk you through all the ways you can trade this precious commodity.
Thanks, Connor. The global natural gas market is a diverse arena, offering traders an array of alternatives for engagement. In this video, we're going to feature three of the most popular: NYMEX Henry Hub Futures, UK Natural Gas Futures, and the Nat Gas Contract for Difference product. After we go over the ins and outs of these instruments, we'll dive into the underpinnings that drive volatility across this exciting asset class. First up is Henry Hub Futures. Henry Hub natural gas futures are offered by the New York Mercantile Exchange. They are listed for trade by the NYMEX's parent company, the CME Group. NYMEX Henry Hub futures are traded electronically on the CME Globex under the ticker symbol NG. This contract is the benchmark for North American natural gas. It is based on transactions from the United States' largest natural gas pipeline located in Louisiana. Next, we have UK NBP natural gas futures. These futures are available for trade on the Intercontinental Exchange, ICE for short. This contract represents natural gas priced for delivery through the virtual trading point operated by the UK National Grid. It is listed under the symbol GWM on ICE Futures Europe and is a prominent barometer of European natural gas pricing. In addition to the futures contracts, natural gas is also available in the form of contract for difference products. An especially popular CFD offering is the Nat Gas contract put forth by several leading brokers. Natural gas CFDs are trading in an over-the-counter capacity, so pricing and spreads may vary according to your brokerage outlet. Now, if you're an aspiring natural gas trader, you must be across several key market drivers. It's important to have at least a working understanding of supply and demand, seasonality, and scheduled news events. Let's look at these gas market fundamentals in detail and examine their potential impact on the markets. First and foremost, the concept of supply and demand dictates the evolving price of natural gas. Now, we aren't going to get carried away with an advanced economics lesson breaking down the nuance of supply and demand. The critical thing to remember is this: if supply outpaces demand, natural gas prices fall. If demand is greater than supply, natural gas prices rise. So when you're trading natural gas, be on the lookout for any items that may impact relative levels of supply and demand. A few examples are geopolitical strife, such as the Russia-Ukraine war, or logistics challenges, like shipping disruptions. Now, the next critical underpinning is seasonality. In trading, seasonality refers to price trends that repeatedly develop according to the time of year. Seasonal trends for natural gas are based on the time of year in the northern hemisphere. They are as follows. Prices typically fall during the summer months and rise during the winter. Why? These trends reflect increased natural gas demand related to heating purposes. So when the temperature falls, be on the lookout for bullish natural gas pricing. Conversely, prices typically slump in warm weather. A great tool to use to monitor seasonality, as well as supply and demand, is the EIA Natural Gas Storage Dashboard. There, you can find data facing U.S. supply and weather patterns. This information is especially relevant to Henry Hub futures contract. Now, no matter which asset one trades, it's always a good idea to be aware of the economic calendar. Scheduled economic events can send prices reeling. This is especially true in the natural gas markets. However, the best thing about these events is that they are scheduled. We can easily manage risk exposure and account for volatility ahead of time. Three events that can instantly sway natural gas valuations are the EIA Natural Gas Underground Storage Report, the OPEC Monthly Oil Report, and the Baker Hughes rig count. All right, that's a good look at the contracts and the basics. Back to you, Connor.
So there we have it. By now you probably realize the importance of natural gas to the world. And more importantly for us as traders, the ways in which you can get involved. The bottom line is this is a versatile market which churns out opportunities on a daily basis. If you can crack this market, then it can really boost your profitability as a trader. As always, if you've enjoyed this video, feel free to give it a thumbs up and subscribe to our channel. We appreciate all the support the channel is getting, and feel free to add your comments in the comment section. Until then, give natural gas a try, and we will see you on our next live stream.